Well, hello, everyone, and welcome to Home Truths, the podcast where we unpack the real issues that are facing the housing market and what it actually means for you, whether that's buying, investing, or perhaps you might be sitting on the fence about those issues, and that is what today's episode is about. My name is Samantha Riches and I'm your host, but I'd like to bring in our, experts that are joining me on the couch for this little chat today. Welcome firstly to you, Brad Duggan, CEO of Metricon. Now, you are the man on the ground. You're in the industry, but you're also talking to the people that are asking these questions. Tell us a little bit about yourself.
Thanks. Great to be here, Sam. I sort of represent 4,500 customers that work with Metricon every year, and I can give you some perspectives on how they're feeling and how they're going through the home buying journey. Now,
on the other couch today is kind of a different perspective, but equally as important when it comes to decision making. And I'm talking, of course, about Cameron Kusher. Cameron, you are a strategic and leading economics expert. What does that mean, particularly in this industry?
Well, I've worked in the property industry for 20, 25 years, and most of my roles have been about researching property. So looking at the data, looking at the economic trends, looking at the housing market trends and deciphering them and telling people what they mean. And I really value being able to explain things in plain English. So most people are not economists. They really need it told in quite layman's terms as to what it means and what it means for them.
And it's such big decisions in people's lives that sometimes we can think about it and go, oh, it's too overwhelming. But that's where you come in to kind of like help us digest the information. And then we come over to you, Brad, as well. Yeah. So two really great perspectives.
It's a scary and exciting time to buy a home, but it's a big, big decision. It's one of the biggest decisions you'll ever make other than maybe deciding to have a kid, because that can be a massive drain on cash resources as well. But it's an obsession. You know, we love property in this country, and it's something that we need to talk about more.
And it's an exciting obsession if you get it right, or as close to getting it right. It's a bit of a roller coaster of emotion for people, and that's what you see with your clients, isn't it?
Yeah, and there's a lot of things that go into deciding when to buy a home, but the emotion is a very powerful thing, and readiness to move into a home. So it's not just the fundamentals from a financial point of view, and I think sometimes people can get caught up in is it the right time, is it the right environmental time to make a decision? But there's a lot of other factors that feed into it. Notwithstanding the fact that they're important considerations as whether someone can afford to buy a home. So
I feel like that is kind of on everybody's minds at the moment. Is it the right time? Because obviously we're a few weeks out from the budget now. We're past the budget. The dust has started to settle. What do we know for certain at this point? And what's still up in the air when it comes to housing rates and those tax changes?
So what we know for certain is that there's two major changes for property. The first one is negative gearing. So at the moment, when you negatively gear a property, if your expenses on your investment property are greater than your rental income, you can claim the additional costs against your normal income. That's not going to be available anymore. So you can still claim all the losses against your rental income, but any additional losses you're going to have to carry forward and claim in future years. But if you buy a brand new property, you can still claim negative gearing. The other big change is the change to the capital gains tax discount. So at the moment, when you make a capital gain when you sell a property and you make a capital gain on an investment property, you pay 50% you pay tax on 50% of that. So that is not going to be available on existing properties anymore either, but it will be available on brand new properties. So these are two really big changes. I think the other point to highlight is that capital gains tax discount change, that is also going to be applicable to other asset classes as well. So if you go and invest in ETFs, Bitcoin, shares, if you start a business, the same tax treatment for those as well.
I think it's one of these things where the government thinks that investors are pricing first home buyers out of the market. And I think there's sort of a lack of appreciation of understanding how important investors are in the market. They provide a large amount of stock. They provide really important rental avenues for housing. And that's something that's going to be quite interesting to see how it plays itself out, because the one thing I'm really certain on is it's hard to convince yourself to buy a new home when the established real estate market is depressed. You buy a home hoping that it will appreciate in value. It's a big amount of money that you're spending on it, and you want to see it grow. And I think at the moment what we're seeing post those budget changes is an environment where we're seeing stagnation in pricing. And I understand that might be meeting the government's objectives because they want to see a slowdown in pricing so that people can afford to buy a home. But it is a bit anti-aspirational in terms of making the decision to buy a home, because you want to make that investment knowing that it's going to be a good one.
Yeah.
So it's going to be a funny period of time for a while.
I think the other point there as well is, so the government is trying to get more people to buy brand new properties, but new supply is only about 1.5% of the overall volume of housing stock in the country in any given year. And if you look at the statistics, investors, they buy about 15% of the purchases they make are brand new properties. And again, that's because there's a lot more existing properties. So I think one of the outcomes of this is going to be that overall investment is lower than it has been. Because yes, some people will go and buy a brand new property, but other people will just choose not to invest because their choices have been narrowed so much.
So you think people are either going to buy new or not buy at all?
Well, there's still the opportunity to buy an existing property, but the way you're going to go about that is going to be quite different, because you can no longer negatively gear. So what that means is if your expenses on that property are more than your rental income, you can only claim the rental income component. Now, those losses can be carried forward into future years, but that's expensive. So only certain people are going to be able to do that. And realistically, I think if you're going to invest in existing properties, you're probably going to do it with more equity and less leverage, because again, that's going to minimize how much loss you're making every year. But most people aren't in a financial position where if they're buying an investment property, they're going to be able to do that. You're really talking about people with quite deep pockets. So I think overall, yes, there's more of an incentive to go and buy a brand new property, but I think overall the level of investment in the housing market will be lower on the back of this.
Yeah.
So your boots are on the ground, Brad. We talked about that before. You've got real-time feedback from customers that are in this decision-making position.
Yeah.
What are they thinking? Are they pausing? Are they pushing ahead, or are they simply looking for someone to kind of hold their hand and go, it's okay, it's doable? What's the feeling out there right now?
I think there's been some assaults on confidence that's sort of hit our market in the last 6 months. So whether it's interest rate rises, whether it's the crisis in Iran, and now with the uncertainty with these changes to the tax environment, it's been real punches in the face, really, for consumers out there trying to convince themselves to make this leap. And I really do see it as a leap. Like we're talking hundreds of thousands of dollars of debts and commitment. I've actually been surprised as the resilience of customers over the last 4 months. We've seen some really great activity out in the market where people have decided it's time. I've waited long enough. I'm going to get into the market. And I can really understand why they're doing that, because they're uncertain as to what the future might be. Like, I think the best way to lock away uncertainty about price is to get in now. And of course I'm going to say that because that's my business, right? But I think there is a lot of people out there that's been sitting on the sidelines for quite some time, and they've decided that the last couple of months have been time to jump in the last 3 weeks. And, the cycle changes quite quickly. Yep. But the last 3 weeks has been really, really hesitant, really, really depressed, where all those punches in the face, I think, have finally started to really land. And I've seen a huge pausing. The still inquiry is great. There's still a lot of people out there looking, but making the leap, putting the pen to paper, there's been some real hesitation. That's it's not surprising. I'm actually thought it would have happened a little bit earlier than this. So it's going to be interesting to see how long it takes for that pause to unwind. People sit back, redo their calculations, build up their conviction again, build up their confidence again, and jump forward. But could be some time, I think, before that happens.
I think that's an interesting one, though, because, for owner-occupiers, these changes in the federal budget that are being proposed, they don't have any impact at all. Yeah. But I think it's just dampening confidence overall. And of course, we've had 3 interest rate increases this year. It's looking less likely like we'll see further interest rate increases, but this is still the highest interest rates we've had in the last 15 years or so. So I think that's dampening confidence. But I think for anyone listening, it's really important to highlight that these tax changes, if you're buying an owner-occupied property, they have no impact on you at all.
Yeah, confidence is the game. People in my business are sick of me talking about it. I should have it tattooed on my face. But it's a commodity. Confidence is a commodity in the Australian economy. And I think these changes, uncertainty, it really is, it's damaging to that confidence. So I'd say to you, Sam, if you're thinking of buying a house and you knew that, Australians buy houses like we're going up a ladder. I look at property still about, I'll buy that property and my plan is what's the next property. And I think that's something that's really ingrained in us because we love it. Obsession is probably not overplaying it at all. That if you feel as though the house you're going to buy today or build today, if it doesn't have an aspiration to grow, and I think that's what we've seen in the last couple of weeks. That there's been clearance rates have fallen through the floor. You've seen prices in Melbourne and Sydney actually go backwards, which is really quite concerning. It makes people pause and like, well, if that house isn't going to grow in 4 years' time to a value that I can realise and build some equity and then grow forward to something else, then people don't make the leap.
And I think that's probably going to affect brand new builders like yourself somewhat as well, because a lot of the areas where you are delivering new homes are in the outskirts of the city where people do go and buy their first home. Yeah. And a lot of them aren't looking at that home as being their forever home. They want equity in that property to grow over the next 5 to 10 years. Yeah. They hope that they get some wage increases at their job and then they can move into that aspirational next property. And I think when there is low confidence, when prices are falling and when there's just a lot of uncertainty, people do take pause and go, well, I don't have to rush to make a decision and maybe time is on my side. And I think also when prices are falling, they also think, well, why would I buy now when if I wait another 12 months, it might be cheaper? But I think it's really important for people to understand that's not necessarily the case in new home building because construction prices are going up, material prices are going up, and that pushes up the price of a new home. So, if you think that in 12, 18 months' time, building a new home is going to be cheaper than it is today, I think you're going to be sadly wrong about that.
Yeah, I think you're spot on. Most of our customers who are building a second or a third home are customers we've already built a first home for because that's the journey, that's the ladder. Everyone's wanting to move to that better suburb, to that better amenity, and sometimes that first home buyer step is the necessary step to build the equity and go forward.
It's the potential that's the exciting part, and we're almost losing a little bit of that potential. So we know how they're feeling from you, Brad, and we've kind of discussed on that. But Cam, if there's someone out there at the moment who's deciding to buy, to build, or to sit a little bit tighter, like you just said, and perhaps take that leap in 12 months, what are the data and the metrics that they should be paying attention to help them make that decision?
I think the big ones to watch are firstly prices, and Brad's talked about that, and auction clearance rates. But keep in mind, if you're looking at buying a brand new property, those metrics largely reflect what's happening in the established housing market, not the brand new housing market. The other one to watch is, of course, the number of properties on the market, particularly in Melbourne and Sydney at the moment. We're seeing a very high number of established properties on the market. Now, that can give you a good opportunity to purchase. But we're also seeing a lot of vendors that are really reluctant to adjust their price down to meet the market. And I think the other one to watch is what's happening with construction costs. Now, unfortunately, we only get that information once a quarter, but that's really important to watch. Over the last 5 years, construction prices are up about 40%. And we're starting to see that growth returning to those construction prices. So the conflict in Iran is pushing up prices of things as well. And when you think about if you want to buy a brand new home, whether you're an investor or a first home buyer, piping that goes into the ground to give you the water and sewerage you need, timber, all of these things, the price of that is going up again. And what that means is if you wait too long to go and buy or build a brand new home, you're going to be paying more for doing that.
Yeah, I think the one thing I'm sure of is that next year prices will be higher than what they are today. I think that, inflation shouldn't be moving as fast as what it has been, but that's something that I feel very certain is going to be the case. Land and construction costs will be higher. One thing I'll just add to Cam there, if you're in the market looking to decide to build a new home and you see established real estate prices going down and you see that as being an alternative, we're seeing that as a very natural alternative, that you're sometimes comparing two very different products. One of those reasons of why costs have gone up so much in the last 5 years is that the standards that are in our homes now are so much better than what they used to be. So if you're looking at a new home to an established home, you're looking at a much different energy rating. You're looking at have much lower costs in how you build that home going forward compared to that established home. The livability standards of those homes are much different. So it's not always just the dollar value, that you've got to look behind it as to what you're actually getting. The value of a new home is a much stronger proposition than an established home when you look at the performance of the home.
It's an interesting one. I've just sold a home and I think particularly when you look at an apartment, for example, people go, oh, look, strata fees are really high. You're paying $3,000, $4,000 a year, but I've just sold my home and we've had to completely redo the garden. We painted the house internally. We painted the house externally. You'd have to do that every 10 years in a house. So if you're buying brand new, you've got 10 years of not having any of those costs. Whereas if you're buying a secondhand home, you might have to paint it next year and that's $25,000. Something might go wrong with the guttering. You might have to replace the gutters. So I think it's not always all it's cracked up to be. Yes, the established home might be a little bit cheaper, but you also need to think about what's the upkeep going to be over the next 5 to 10 years on that compared to something brand new.
Yeah, it's a lot of other things to consider rather than just the hard number.
So here's a little question for you, maybe a little curveball, but how do people kind of work out what category they fit into or what suits them and their family better? If I was today coming in here to go, guys, I want to get into the market, how do I decide if brand new is the right thing for me and my family or existing home? How do I make that decision?
I think the first thing is you've got to look at what's non-negotiable. You know, you can't be compromising on a home. It's the thing that you're going to spend the most amount of money on. And it's going to have a real impact on your life. So if there's things that you actually want that a new build can only deliver, then you're really looking at established real estate, regardless of the price and the economic outcome that you're going to get. Don't compromise because you're looking at something that's going to be ever present in your life. So that's why, if you have those very clear understandings about what you want from a home, that a new build is a great opportunity for you to make sure you can deliver exactly what you want. Right. When you go to established, it's very rare. I've bought plenty of homes myself. It's very rare you walk through a home and you're like, this is exactly what I wanted. Yeah. There's always some form of compromise. You got to be really clear about, what is this going to be? Because it's not just about the dollar value. It's about the fact that you're going to live in it. It's going to be ever present in your family's life every day of the foreseeable future. Make sure you don't compromise on what it is you want.
Yeah. Oh, look, I think that's right. And I think for some people, the location is number one and then everything's a long way past that. But, it could be 4 bedrooms. It needs to have 2 bathrooms. It needs to have separate living areas. You really need to go through and say, these are the things that are the most important to me and then make the decision based on that. And as Brad said, if you're building a brand new home, I mean, location, maybe if location is more important to you than the house itself, maybe a brand new home may not be for you, depending on what that location is you want. But if it's, energy efficiency, if it's a certain layout, if it's a certain level of finish, then that's when you really consider a brand new home because you can design it and build it the way you want it to be.
Yeah, location is definitely number one. Like we see our knockdown rebuild business is so strong because people, they want to live in the suburb that their friends are, where their kids go to school. You get to avoid paying stamp duty because you're not, flipping a house and moving somewhere else. It really is quite an economic decision as well. But it's a cliche, but location is really important.
Well, Cam, we're going to go back to those headlines around this capital gains tax. There's been so much noise and it can kind of be easy to get lost in the noise from so-called experts kind of giving their opinion. And that's why we want your opinion on it. How much of it is just noise and how much of it do we need to, pay attention to and not get spooked by?
Look, if you're an owner-occupier, it's largely just noise. But I think what it does is I think Australians are generally quite aspirational. So even if you only own one home or you don't even own a home yet and you're thinking of buying, I think some of it is, well, I want to become an investor in the future. I want to go and buy an investment property. I want to go and buy ETFs or go and buy shares. And I think it is a bit of a hit to the aspiration of people here in Australia. And I think that's where it really sinks confidence. If you're an investor, it's not that you can't invest anymore. It's just that the way you're going to invest going forward is going to be very different to how it has been in the past. And I think investors have typically bought properties and looked for capital gain. These changes actually make it more about the rental return that you're getting and buying the right type of property. And again, some of the suburbs where a lot of new housing is being delivered, you get much better rental returns on those properties than you do in those inner city suburbs. So I think that it's just it's not that investment's been killed by this. It's just that investment is going to look very different. And as I said, I think overall the level of investment in the housing market will be lower on the back of these changes. But it is noise. And, I think whenever anything like this happens, there's a lot of noise for 6 or 12 months, and then eventually people just get on with it. I mean, I remember when the GST came in and everyone thought it was the end of the world. I mean, 2 years later, you didn't even notice that prices had gone up 10%. It's just you get back and you get into things and you don't worry about it too much.
Do you have a view, Cam, on what you think that digestion period is going to be this time around? Like, are people going to move through it quickly, or do you think it's going to be sitting here for some time?
I think it'll be here for a little bit, mainly because it doesn't start until July next year. So you don't actually see it on your tax return until 2028.
It's only proposed at the moment. It's not actual law right now. We've got a bit of time.
We've got a bit of time, but people aren't actually going to see the full impact of this really for another 2 financial years. So I think it could weigh on sentiment for a little while. And then you've also got the possibility, if at a future election there's a change of government, that the opposition at the moment might actually roll back a lot of these changes as well. So there's probably a little bit of the uncertainty around that. But I guess the best advice is, make an investment decision that makes sense. Do your research and understand why you're investing. But don't necessarily be deterred from investing because of these changes.
I guess everything new can be a little bit daunting, whether that's in housing or in choosing schools or anything in life. Everything new is a little bit scary. So I guess if you get to speak to the right people and talk about your independent personal situation, and whether that's financial situation, personal situations, speak to an expert. They can help you make that decision, and that's where you come in, Brad. What are people, I guess, most worried about at the moment, or most needing their hand held with, that you're finding at the moment?
Yeah, it's a hard process, and people come in. We're very conscious of the fact that we're experts in how to build a home, and that when people come in, they don't have that degree of background, and that we need to go through it in a very slow, very layman's way, so that you don't confuse people, because it is a complicated process that we try and make as seamless and as easy as possible. People want to understand what they can afford. Sometimes they make the mistake of buying land first and then trying to find a house second, and our advice is really understand your budget.
Why is that a mistake?
Yeah, well, if you overspend on your land and you have this vision of what your home wants to be, and when you come in and speak to us about what we can then do on that land, you may be restricted on, from a planning perspective, on the home that can fit on that block of land, or you might find that you've spent too much on the land and you don't have enough money to create the home that you want. So it's really important to start the engagement early. I think the customer that comes in and starts talking to our team about what they want, what can they afford, we can give them really good guidance. They don't need to go speak to a developer. We can help facilitate them to do that. So we try and be as much of a one-stop shop as we can be. But you've got to, make the decision of a house and land package at the same time.
Okay, so it's not really chicken or the egg. It's about knowing the whole picture before you make the decision to buy a land or house first.
Correct. That's exactly right. Otherwise, you probably could find yourself being disappointed by the planning regime or how far your budget will go. So early engagement is great. Come in as soon as you can. And we're generally finding it takes us 10 months from engagement with the customer at the beginning of when they first walk in the door to when they actually contract. And that's a long time, but we actually enjoy that process because we want customers to feel, understood and that they can make the right decision. So we'd love to be able to give them a great answer straight away when they come in, but even this period of uncertainty at the moment, people want to take their time.
If someone comes to you that's sitting on the fence, waiting perhaps for that perfect moment to buy or build or invest, what would you say to them about trying to time the market?
I think it's not just about the economic environment. It's definitely not about what you read in the paper. I can tell you that. It's about your personal circumstance, and we really want to understand is this the right time for you and your family? So you've got to have that really clear conviction, first of all, that this is what your family wants. It's a lot of pressure for a family to build a new home. The second thing is making sure that it's you understand exactly what your budget is, that you can actually afford to do what you need to do, and that you're realistic about the time that it's going to take and the budget that you have. So that's the two critical things I think are important.
I think also you've got to understand not to overcapitalize as well, like what your aspiration for what your property is and what's actually going to perform best for you, going to have the best resale value. I think that's really important to understand as well, because not so much in the new home space, but you see this a lot in the established market, that people go and do these massive renovations that cost them a couple of $1 million, and then they come to sell that property and they can't recoup those costs. So it's not as big of an issue in a brand new home, but if you're in an area where most properties are sort of medium spec and you're going ultra high spec, then there may not be the demand for that property when you come to sell. So I think you need to understand those things as well.
It's a really important point to think about, isn't it? Because people they buy these houses going, I can, to your point before, you said not many people walk in and go, this is the house for me. Most people walk in and go, I can see potential in this.
Yeah.
And if you get a bit too excited on that potential, it doesn't always return.
Yeah, and you got to find a builder that's going to give you that confidence. And when you come to us, you'll definitely get that.
So we'll go to both of you on this. Either one of you can jump in and I guess answer it. What is the biggest misconception at the moment in the housing market?
Oh, that's a good question.
There's a few out there with all of this noise that's going on, but what's the biggest one at the moment that people are struggling to get past?
I think, again, I've heard it from quite a few people that owner-occupiers are looking at these tax changes and saying, they're changing negative gearing and capital gains tax. I can't buy at the moment, not understanding that that's not something that actually impacts on them. Probably a second one is that it's not an opportunity to buy when you've got a falling market. It certainly is an opportunity to purchase properties, and even interstate. If you're coming from a market where prices are very high, like a Perth or a Brisbane, there can be opportunities for you to buy in a market like Melbourne, where prices have been very depressed for the last 5 years as well. So it's not a market without opportunity. It's just that the opportunities at the moment look quite different.
Is there something driving you mad about what people are thinking that's not actually quite true?
Like my misconception is I think there's a lot of people out there who have been convinced that they can't do it.
Yeah.
And it's really clear to see why they feel that way, because the government's seen to be doing drastic things right now to make changes to try and make it easier. There's lots and lots of talk about when interest rates go up and people talking really negatively about it. I think there's a lot of people out there that don't even come and have a look because they feel that it's hopeless, that they are, whether they've a family member or the media or someone has convinced them that it's just all too hard, your generation's screwed, you're not going to be able to move forward. And one thing I see time and time again from my team is people coming in and being surprised. Mm-hmm. Actually, I can do it. And okay, it might be a little bit different to what I thought it was going to be. Maybe it's a townhouse rather than a detached dwelling. Maybe it's a 3-bedroom home rather than a 4-bedroom home, but there are ways to begin. And the one thing I'm really certain of, if you begin, it's a ladder and you work your way up to something that maybe, you've got a beautiful home that meets your needs now and you haven't compromised on it, and that it will grow in value, and in time you can then move on to whatever that next iteration of that is.
I also think that it's obvious the opportunity, especially if you're buying your first home, it looks very different to what it did 20 or 30 years ago, but you can't dwell on that. That's just the situation. That is how it is.
20 and 30 years, we'll be saying that about now as well, right?
Exactly right.
That's exactly right.
30 years ago, somewhere like Coburg was, the end of Melbourne basically, and now the end of Melbourne has moved so much further, and you're probably feeling like in some of these areas you're buying a long way away. But think about in the next 30 years what that's going to look like. So it's not just a purchase for now, it's a purchase for the future. Yeah. And, cities evolve and change over time. And whilst you might think that it's harder than what my parents had and it's not the same opportunity as my parents had, it's just different. But in 30 years' time, your kids are going to be saying the same thing to you.
Absolutely. Yeah. So this is to both of you. Whoever would like to jump on first, maybe we'll go to you, Brad. Sure. If there's someone listening today that after all of this is ready to go, they're primed and they're serious about buying or building or investing this year, what would be their next step? Perhaps a checklist, but what's the one thing that they can get on with next?
Yeah, definitely. I think understand your budget. Sit down as a family, go speak to a financier. They're all very interested in building their book of work right now to grow their mortgage books. Understand what you can afford and be very clear on that before you go any further. Then go find a great build partner that you can go talk to and get really good advice. Make sure you have conversations about the land and the house together so you're not overspending on your land or committing yourself to some land that then doesn't put that home on it that you really want. So be really clear on that. And make sure you're spending some time as a family to understand what your non-negotiables are. What do you actually want in that home so that when you go and speak to that build partner, you're very clear on what it is. And if you have those 3 things, that we're pretty sure that your build partner will be able to find a home that can really fit what you want.
Mm-hmm.
I'd just add to that in terms of the finance, what a bank is willing to lend you, don't necessarily borrow all of that. Make sure that you're comfortable with the amount of money you're taking on, and make sure that you're allowing for the fact that interest rates might be higher over the length of this loan. I think the other big one is actually go and just jump online and have a look at different house designs and get an idea of what you like and what you don't like.
Yeah.
Because I think if you can go to the builder already having a bit of that knowledge about this is the kind of house we like, this is the kind of layout we like, it can really quicken up the process of moving forward and selecting a builder and getting something built.
I think, Sam, just start, just jump in. And because I think it's a process. Don't feel that when you walk into a display, you're going to walk out feeling like we're ready to go. It takes time to build that confidence, particularly in a world where it's uncertain and, there's a lot of media out there making you feel uncertain and really unconfident. Make sure that you commit to it, go through the process, educate yourself so that you can move forward with confidence.
All right, well, let's get into some rapid fire questions because sometimes we just need quick fire answers that we can make some moves on. Cameron, we're going to go with you first. Where are we right now in the cycle?
We're in a cooling phase of the cycle. So people like to think of a property clock and 12 o'clock being the peak. I'd say we're probably at about 1 or 2 o'clock. But again, different cities, different timing. So, Melbourne's probably closer to 5 or 6 o'clock.
Yeah.
But places like Perth and Brisbane probably closer to 12 or 1.
Okay. Brad, best piece of housing advice you have been given? Or one that you've been given, you can give out yourself, but often that is one that you've been given.
Yeah, I think don't delay. Once you've made the decision you want to get in, because the longer you take to get in, the harder it will be to move forward.
Okay. Cameron, the one number that every Australian should know about housing right now.
It's not an exact number, but it's about 179,000, and that's the number of new dwellings that were delivered over the last 12 months. And the government's got a target of delivering 240,000 new dwellings every year. So,
what does that mean for us, though?
So if we continue to not build enough new housing, that is going to over time continue to put pressure on prices. So getting back to Brad's point.
Okay.
If you delay, yes, the market's a little bit weak now, but longer term, if we continue to underbuild the amount of housing we need, that's going to mean that the cost of housing continues to rise.
Yeah, we're 60,000 homes a year short of what we should be building.
Wow. Brad, what's your favourite housing trend at the moment?
Spaces that can be used for a lot of different purposes. So, where mum can use it as an office, the kids can use it for PlayStation, and I can shove my in-laws when they come and stay. So, that really sort of functional space is really good.
All right, well, we're about to wrap up and I really appreciate both of your time here. We've talked about what they can do in the next month. What are they going to do before they get up from wherever they are today? What's one thing that they can focus on and look forward to if getting in the housing market is what they're looking to do?
What they can look forward to, I think it's to love where they live. That's my catch cry. It's you've got to create a space where you want to be really happy. So that's the thing that you can look forward to when you build a Metricon home. It's a beautiful designed home where you're gonna love.
I think embrace the process. Yes, it's going to take you a while to make a decision and purchase, but just get involved with it. And even if you don't end up buying right now, at least go through the process. So when you do decide to buy in the future, it's a lot easier and you know what you're going to expect.
Yeah, educate yourself, build your confidence, to get out there and start to understand what's possible.
Get excited.
That's all.
So exciting. Well, thank you so much to you both, Brad and Cameron, for joining us here today on Home Truths. That's Home Truths, the Australian housing podcast that keeps it real. If today helped you think a little bit differently about what's ahead, share it with someone who needs to hear it. Of course, please remember to like and subscribe to the show, and we'll see you next month to unpack more on the Australian housing market for you on Home Truths presented by Metricon. The Home Truths podcast contains general information only and does not constitute financial advice. Please seek independent professional advice before making any financial decisions.